All right, so let's dive right into this story that's been grabbing headlines lately. Chinese tech stocks. Everyone's heard of companies like Alibaba, right?
Mhm.
Basically, China's Amazon. And then there's Tencent, the company behind. Well, WeChat, that app is absolutely everywhere over there. Now, these companies, they haven't exactly had it easy in the market recently, but get this, things are looking up, way up.
Yeah, it's pretty remarkable when you think about it. It's almost like, well, imagine watching a rocket finally take off, after sort of sputtering on the launch pad for a bit. What's really caught everyone's attention is how the Hang Seng Tech Index has been performing. That's basically China's version of the Nasdaq, just so everyone's on the same page. This index just hit a 13-month high.
Wow, a 13-month high.
Yeah.
It's got to be a good sign, right?
Oh, definitely. And it's even more impressive when you consider it jumped 20% in just 1 week. Well, let's just say that's not something you see every day. It's a very clear indicator that something significant is happening.
And speaking of significant, I was reading this CNBC article, and they were talking about how Alibaba's stock price climbed back up over $100 for the first time in like over a year.
Mm-hmm.
What kind of an impact does a benchmark like that have for a company? I mean, that's a pretty big deal, right?
Oh, absolutely. A higher stock price, it's like, well, think of it as a shot of adrenaline for a company's finances. It often makes it easier for them to get access to more capital, which they can then use to fund new projects, really drive innovation. For Alibaba hitting that $100 mark again, it's a signal to investors. It tells them that they're back on track and ready to grow.
It's almost like a vote of confidence,
Yeah.
right?
Exactly. And it's not just Alibaba either. CNBC also mentioned that Tencent hit a 2.5-year high. Seeing gains like that for big players like Tencent, well, it just adds fuel to the fire.
So when investors see these kinds of numbers, what goes through their minds? What does it tell them?
Well, often it makes them feel what we call bullish, meaning they're optimistic about the future, more likely to invest. And for those who are already invested, I'd say they're probably feeling pretty good about their decisions right now.
It's like everyone's suddenly betting on Chinese tech again.
In a way, yes, but the big question is, why now? What's changed to push these stocks in the right direction?
Yeah, that's what I was wondering. The CNBC article I mentioned earlier, it pointed to some recent moves by the People's Bank of China, the PBOC, as a possible catalyst for this surge. So for those of us who might not be familiar, what exactly is the PBOC? And more importantly, what have they been up to?
Right. So the PBOC, that's China's central bank.
Yeah.
They're the ones controlling the flow of money there, kind of like what the Federal Reserve does here in the U.S. And they recently made a pretty interesting move. They cut something called the Reserve Requirement Ratio, or RRR for short, for banks.
The reserve requirement ratio. Okay, I'll admit that one's a bit of a mouthful. Can you break that down for us a bit? It
Yeah.
sounds important.
You're absolutely right. It is important. Essentially, it's all about how much money banks have available to lend out. Imagine a river, and there's a dam controlling the flow of water. Well, the RRR is like that dam. When the PBOC lowers the RRR, it's like they're opening up that dam a little bit, which lets more water, or in this case, money, flow through the economy.
So more money flowing through the system. That's going to have some kind of ripple effect, right?
Mhm.
What happens when you just, I don't know, increase the money flow like that? So more money flowing through the system, that's got to have some kind of ripple effect, right? What happens when you just, I don't know, increase the money flow like that?
Oh, absolutely. Yeah, there's definitely a ripple effect. This kind of move by the PBOC, it's basically like sending a signal. They're trying to stimulate the economy, get things moving. It encourages banks to lend more, and that, in theory, should boost economic growth.
Okay, so they're trying to get the economy going.
Yeah.
But how does that translate to these huge jumps in Chinese tech stocks?
Right. So when investors see this kind of proactive approach from a central bank, it tends to make them more confident, more willing to put their money into the market, and they often gravitate towards sectors that are really sensitive to economic upswings, places where they expect to see quick growth.
And tech often falls into that category, doesn't it? It's like when people are feeling good about the future, they're more likely to buy the latest gadgets, invest in the companies that are innovating, right?
You got it. But what's really interesting here, and what CNBC pointed out, is that this move by the PBOC to lower the RRR, it's not just about general economic stimulus. It's also seen as a way to give a little extra help to the Chinese property market, which, well, let's just say it's been struggling a bit lately.
Right, I'd heard about that. So how does lowering this reserve requirement ratio actually help the property market in China? And then how does that tie back to the tech sector?
Okay, so by injecting more money into the system and making it easier for banks to lend, the PBOC is hoping to make it easier for people to get mortgages. buy homes. And it should also make it easier for developers to get financing to start new projects.
So it's about getting things moving again in the property market. Makes sense.
Exactly. And the idea is that if the property market is doing well, that'll boost consumer confidence, get people spending again. And when people spend more, well, tech companies tend to benefit. It all comes back around.
It's like a domino effect, right? A boost here creates momentum over there.
That's a great way to put it. And it's worth pointing out that investor sentiment toward Chinese tech was pretty shaky just a little while ago. There was a lot of uncertainty, hesitation, some people even saying that Chinese tech was over. But then PBOC makes this move, Alibaba and Tencent start posting these incredible gains, and suddenly it's like someone flipped a switch. The mood has definitely shifted.
Yeah, it's a real turning point. And speaking of investors, I can't help but think about what CNBC mentioned about billionaire investor David Tepper. Apparently, he's been making some big moves in the Chinese tech market. That's a pretty big deal, right? This isn't some rookie investor. We're talking about David Tepper.
Oh, absolutely. I mean, David Tepper, he's one of the most successful hedge fund managers out there. When he talks, people listen. He's known for making these, well, big bets, often in areas that others are, well, maybe a little afraid to touch.
So he's not afraid to take risks, especially if he sees an opportunity. And it sounds like he sees one in Chinese tech right now. But is he right? I mean, it wasn't that long ago that everyone was worried about a slowdown in China. Are we really seeing a full-blown comeback here, or is it too early to tell?
Yeah, that's the million-dollar question, isn't it? And honestly, it might be a little too early to break out the champagne. While this recent surge in Chinese tech stocks is definitely a good sign, and, it's got people excited, we're still a ways away from those record highs we saw back in, 2021?
So we're not out of the woods yet.
Not quite.
Oh.
There are always challenges, right? Especially in a market as complex and, well, let's be honest, as unpredictable as China's. We've seen how government regulations and the global economy can throw a wrench in things. It's not just about this one rally. It's about what happens next.
So for those of us who are trying to, maybe not predict the future, but at least understand what's going on, what should we be keeping an eye on? What are the key things that could tell us whether this is a short-term blip or the start of a real sustained comeback?
Well, I think keeping a close watch on the PBOC and their monetary policies is crucial. Will they continue to try to stimulate growth? Maybe lower the RRR again. And then there's the whole situation with the Chinese property market. Will that stabilize and start contributing to consumer confidence again? Those are big factors.
It's like we've got a front row seat to this high-stakes game, right? And we're trying to figure out who's going to make the next move.
That's a great analogy. And like any good game, there are multiple players to watch. You've got the government, the central bank, these major investors like David Tepper, and of course the tech companies themselves. It'll be fascinating to see how they all adapt and innovate in response to the market.
It's going to be interesting to see how it all plays out. This has been fascinating, and I think you've given us a lot to think about. So to wrap things up, I have to ask, is this surge in Chinese tech a sign that they're back in the game for good? Or are we, maybe getting a little ahead of ourselves?
It's never a good idea to make predictions in this business, right? But I will say this. Chinese tech companies, they're resilient. They've faced challenges before, and they've always found a way to bounce back, to adapt, to come up with new ideas. This recent rally could be the start of something big, but it's important to stay informed, stay curious, and never stop asking the right questions.
Words to live by. Sounds like this is just the beginning of the story. We'll definitely be keeping an eye on it. Thanks for breaking it all down for us.